Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Hey guys, Sarah Larbi here, and welcome back to another episode of Where Should I Invest? I hope everyone is doing well. And also, I am reading a lot more, so I'm just curious what you guys are reading and if you have any good books. I'll tell you a couple recommendations that I have if you're looking to read a book, not necessarily real estate related, but Pat Flynn, who has one of my favorite podcasts right now, Smart Passive Income. He has a book called Superfans, and it is great. And I also just finished reading Atomic Habits. So those are the two books that I've read this month. Let me know if you guys have any good recommendations for future ones. Also, AJ Hazzi is my guest today, and he is a really successful real estate investor, also a licensed broker, property manager, new build. He builds a lot of new builds as well, and a lot more in the Okanagan region. And he is out west. He's an author, a coach, has done many great things as well. We have a great conversation. And we talk about also the furnished executive rentals. And one of the reasons that helped boost my cash flow was that I took some of those properties and I, instead of renting them long term, decided to rent them on that medium term market or the short term market to boost the cash flow. So we talk about that as well. And I hope you guys enjoy the podcast. And if you haven't yet, just register on my website. There is going to be information about the Burr Freedom Community that is starting in January. It's going to be 2 monthly calls, and it is going to go through for the entire year. So spots are limited. It is an annual community of live calls that we're going to go through everything that you will need to know regarding the Burr process. You're going to meet some of my team as well. And one of those monthly calls is going to be content. We're going to go through every single step in a lot of detail. And then the other monthly call is going to be me bringing in a team member and really digging into that specific module. So for example, we're going to talk about the buy. And so I'm going to be bringing in a few really good team members that help me find deals, buy deals, and then we're going to get to the renovation process. I'm going to introduce you to some of the contractors that have helped me as well. And also we're going to talk about just everything that you need to know that I've been able to do, my documents as well. And it is a whole year process. It will be affordable. It is going to be a bigger group, but it is still going to be limited. So I hope that you will join me on that. More details will be out. I will send out information by email. So just make sure that you are on my mailing list, sarahlarbi.com, and then just sign up so that you can get my information. On that note, guys, enjoy the podcast and reach out at any time. And I'm also on Instagram, if you have Instagram, at Investor Sarah Larbi. Now let's bring in AJ Hazzi. AJ, welcome to the show. How are you?
Very well, thanks, Sarah. Thanks for having me.
So you are in wonderful BC, and tell us a little bit about what you do and who you are.
Sure. Yeah, we operate out of Kelowna, BC, so it's a fantastic place to be based out of. And I've been in real estate since I was about 19 years old, and over the last 20 years have created a real estate firm, construction division, property management division, and now we've got our little private equity fund as well. So vertically integrated all the way through the real estate game, and I love it from the investor point of view, from the real estate point of view. It's just all I've ever known, and it's what I eat, breathe, and sleep.
Very cool. So how did you even get started? Like, what made you decide to go into real estate and make everything around you real estate related?
It happened sort of accidentally. I was a travel bum after high school, went to Australia, and there was 5 of us traveling together, and we were spending $30 a night at a hostel. And so I don't remember which one of us figured it out, but we could rent a house and then rent out rooms. And lo and behold, after about a year there, I was living for free, and I was saving some money because I was working as a DJ, and I came back with about 10 grand. I didn't know what to do with that money, but my dad said, you could put a down payment on a house. And he introduced me to the concept of high ratio financing at that 19 years of age. And so I didn't have any credit. So I joined forces with a buddy that had some credit at the time. And so 2 19-year-olds bought a 5-bedroom house for 160K and rented out rooms to our buddies, and we're living for free. Actually, we're making a little bit of money, and that just sort of got us going, and we started buying other properties. And I wanted to really entrench myself into it, so I got licensed that same year, and I was a licensed realtor at 19, and just never looked back. Started reading all the books, Don Campbell's books, and Gary Keller's books and all that, and just immersed myself in it.
Awesome. Now, as a real estate investor specifically, what is your strategy and what does your portfolio look like today?
Sure. So when I started, it was single family homes, suited. I think a lot of people do that. I executed the BRRRR strategy, which I know that you're really championing that strategy, and I think that's a wonderful way to build a portfolio. And then as time went on, I started going into smaller multifamilies and then larger ones, and so now I've got a mix between, duplex, fourplex properties, as well as, some 20-unit apartment building, a few buildings like that. They're harder to come by out here. I know they're a lot easier to find in other centers, but anytime anything like that, 18 to 24 units pops up where we can add some value, that's really what we're looking for. And, my strategy today really looks for stuff that cash flows, but has some residual land where we can do some further development. I like because I've got the construction and the development background now, I like the opportunity to add value as well as make cash flow.
Awesome. So you've got, obviously the experience, and where are these properties? Are you doing this in expensive areas? Are you doing these in, some of the outskirts further away? Where are you buying?
Yeah, expensive's sort of a relative term, but yeah, here in Kelowna, I would say that the numbers are starting to get a little more difficult given the pricing in relation to the rents, but we still can make some decent cash flow here. A duplex, side-by-side duplex here will cost you about $750K, and you'll rent it for probably 50 grand a year. So that's sort of how the numbers work. About a 15 GRM is what you're looking for in Kelowna. I find you can get slightly better numbers if you go just outside of Kelowna to Vernon, for example, or to Penticton. So we're in the Okanagan Valley. I do have some properties in Alberta, and we do have some properties in Arizona as well. But the primary target for us has been the Okanagan Valley, just because, obviously the thumb on the pulse of it here.
Yeah, absolutely. Ironically, just the past week, I've had like 3 different people reach out to me from BC, different areas, and they're like, I have such a hard time figuring out how these numbers work. And, when I listen to your podcast, you're talking to a lot of people that are buying, $200,000, $300,000, $400,000 properties, but I can't find anything like that. So can we just break it down, based on, some of the more expensive quote unquote markets? What are some of the strategies that people can think to say this will make sense in these types of markets, right? It probably isn't buying and holding a single family property that's turnkey. You can disagree if you want, but what are some strategies that people can look at that make sense out there?
You can still buy a 5-bedroom single family home with a suite in the basement. I like to look for ones that have got some deferred maintenance and where they've been mismanaged, because obviously that's where the opportunity lies to add value. But you can certainly still find your way into one of these houses for in the low 500s, and you should be able to extract $300 to $3,500 a month in rent, depending on how nice they are and what neighborhood you're in. So you will see, a reasonable positive cash flow, despite the fact that our average single family home here is, closer to $800K. You do have, that sort of entry level, that buy level home that, can still be picked up in the low 500s. If you're looking at buying nicer stock, that stuff that's $850,000, what people are doing now is still buying them. The ones that were from the 90s, you're going to get a little bit better deal, doing the cosmetic overhaul on them, and then renting them out as executive rentals. There's definitely a market here as people are moving to the area who want to rent out nicer homes for, $4,500, $5,000 a month, that kind of thing, especially if they're furnished. So a lot of people are doing furnished executive rentals now on some of the more expensive stock. And I think that's a strategy that's used in the Lower Mainland as well to try to get cash flow on the expensive houses.
Actually, that's really interesting that you mentioned that. So personally for me, I finished this property in Burlington. ARV'd for about 890, bought it for 690. Anyways, did some renos. And exactly what you said, there's actually a company, they're from BC, and they're sending their executives over, and they're going to be right now, I mean, per month, $4,500 for the house per month, versus Airbnb. I actually like that because they're going to be there for, 30, 60, 90 days. I'm fine if they want to stay longer, as long as it's not rented, but it's like a little bit less wear and tear. Cause I do allow pets, which is, it's my personal, thing. But you don't have the kids, you don't have the wear and tear as much if you've got the professional executives coming in. But it is, I will say one of the things that are interesting, I don't know how well you know Ontario, but so I'm talking to my lawyer right now just to see like what can be done in order to like put something together for the company so that it's, considered short term, but as soon as 28 days go past that, you're stuck with the LTB and the RTA should something happen. So like there's that like fine line. Again, talk to your lawyer about it. I'm not giving you guys legal advice, but there is the downside to that, right? When you're renting for those executive type of rentals, but it's a great idea. So, what are some of the biggest positives, I guess you can think of out there with people doing that in BC?
Well, I think the biggest positive is just the tenant profile. The type of person that's in the home has a very low likelihood of, doing a midnight dash, has a low likelihood of putting a hole in the wall. This is just a high caliber of people. And not to speak ill of the people who are at the lower socioeconomic bracket who rent out our apartments, all that, they're wonderful people. But I just find that with these executive rentals, your problems per unit goes down considerably. So I think that's probably my number one. The cash flow, I think still probably is better at the entry level. I still do think that you're going to get a better rent in relation to your price, your purchase cost.
Yeah. No, that makes sense. So, it's definitely a different way to think, right? Because at some point, Airbnb can only take us so far, and who knows that, to me, there's a little bit of uncertainty with that whole piece there. But how does somebody figure out how to create, and I know that we're taking a different direction, but you can, share your thoughts, how to create that executive type of rental? Like, who do they approach? How do they find, people or companies to be able to set that up with them?
Yeah, I think there are networks of groups that are doing this and looking to place people. I've found that advertising on LinkedIn in certain niche markets, like we're a resource. A lot of people who work in oil and gas will have their family stationed in Kelowna. We don't have that here, but it's close enough that you can fly from the Kelowna airport, up to Fort St. John and that type of thing. So a lot of people keep their families here. So if you know what those companies are, right, you can reach out directly, do some outreach direct through LinkedIn to the executives that way. But I've found that just posting it through, just through our normal channels, there's such a demand that you almost don't need to, depending on where you are, of course, but here for sure, you don't really need to get that creative. They'll find you. There's just so little of that type of product that they will find you.
Yeah, absolutely. So what are your thoughts? So this is one of the things I've been talking to my realtors about, my team, but there's a lot of people that are fixing their kitchen or doing some construction, or they're in between houses and in between moves. I think there's a market for that, right? It's from the short to medium time frame. Maybe you've got somebody that has a house that's not yet being built or finished, and they need a couple months, 3 months. I think there's a good market there. So I've reached out to a few of them to start putting some feelers out there. But I don't know what your thoughts are on trying to target some of the homeowners in transition.
Yeah. And, it's funny you mentioned that. I have an executive rental in Arizona, and our realtor constantly fills it on the off season for us with people who are building a house. And that it's so almost every year, when we're not down there, someone's in there for 8 months and they're in the process of building a house, because that's roughly how long it takes. I think in order to find those people, typically it's your realtor network that's going to know those folks that are in that transition, right? So, I think it's making people aware that you've got a place that's available for that. And we've got a group chat in our group of realtors, and constantly we're seeing that who's got a 6-month rental, who's got an 8-month rental that's furnished, right? We're seeing that all the time because we'll sell a lot to somebody and now they're like, okay, well, where do I go?
Mm-hmm.
Right? So I think it's the realtors that are going to keep that full. And then there's all the little, online forums and things like that I think you could plug into as well.
Yeah, no, absolutely. Really cool. So I want to switch it back a little bit to your business, and, how you got all that set up, but talk to us about, all the different pieces, because you're a realtor, you mentioned, you've got a company that does a few different things. So just, can you share the 30,000 foot view on what that looks like?
Sure. So Vantage West Realty is our real estate brokerage, and that's comprised of about 20 agents and 10 administrators, and it's just a really strong team that offers a 5-star service to its clients. We've made our niche investment real estate that probably only makes up about 20% of the sales that we do on an annual basis. So we've got that, and then the next piece was property management, because we were dealing with so many investors, and because I had my portfolio at a certain level, it just made sense to add the property management. So now we've got about, I think, 500 doors under management. And then the maintenance of that and the new construction that was coming from that, it made sense to open up a maintenance division and a new construction division. So we added that. So this was just a progression as the volume was there. We kept adding more things. And in the background, I had always been doing the real estate investing side and then coaching people on a one-to-one basis on a strategy where we were buying at wholesale and selling using a rent-to-own strategy and earning a really great cash flow in between. So I was doing this on a one-to-one basis, and then things got a little bit tighter for investors from the banking perspective, and it got more challenging to do this on a one-to-one basis because a lot of my clients were retirees looking to augment their retirement because their income wasn't there anymore to get the mortgages. I put a fund together where I went out and personally guaranteed a large line of credit, and then we essentially, through a limited partnership now, are executing this strategy, but together as a partnership.
Lots of moving pieces. That sounds really interesting. So
Yeah.
I want to dissect a little bit of the brokerage piece first. So you're working with investors, a lot of investors, and are you helping them with like different strategies? Is it, buy and hold and the BRRRR and flipping? Walk us through that.
Definitely, BRRRR is a big strategy that we endorse a lot. People come to us and we sit down with them and try to understand their goals. If they're looking to create income, then we'll take them down to a few different strategies, which might include flipping. It might include rent to own, that kind of thing. Someone's looking to just create growth, and they've got lots of runway left, and they're looking to take whatever their $250,000 and see it turn multifamily and put them into a small multi and show them how to add value and show them what happens over time to their equity in that. So we've got a number of different strategies that we'll use depending on where the client's looking to go and what their time horizon is.
Okay. All right. Very cool. Now with the property management, are you also helping them, set up the property management piece afterwards? So like, let's just say, for example, I'm in Ontario, I'm interested in investing in, one of the projects out there, and I want to be a little bit more hands-off. Like, walk us through what that might look like for somebody that's more remote.
Yeah. And that's why we wanted the property management, was to create, a front-to-end service so that people could come, they could acquire a property, would be in good hands. One of our property managers would have already seen, prior to making the acquisition, would have already told you exactly what they think it'll rent for. And then we've got a huge database of tenants, plus obviously, the marketing pillars to bring in a huge surplus of quality applicants, and then we'll sift and sort through them, do all the background checks, do the placement, and manage them all the way through. And we do property management with a little bit of a twist, because lots of property managers don't think in the language of the investor. They don't think in terms of the return on equity. They're really just all about keeping it full and keeping it maintained. We take it a sort of one layer deeper, where we actually will analyze on an annual basis how your investment is doing. And so we'll do a report through our software to show you what your return's been, and then make some consultative recommendations as to how you can increase your ROI.
Yeah, that's really interesting, because I think that's the big thing, right? Is, as an investor, especially some newer investors out there, you might not have all of the different techniques or ideas or ways to, maybe decrease expenses and increase income and what can be done. So I think that's actually very interesting. And personally for me, I manage my properties. At some point I will find a property manager to manage the portfolio and be out of the country a little bit more. Hopefully the borders reopen at some point. But it's it's important to hire for sure the right property management company that's going to have your best interest, but also be able to give you those insights. Because it's not just about, okay, collecting the money and doing the increases, but like, let's think outside the box. So what are some ideas that you've provided your investors from a property management standpoint on things that they could do to make it better for the following year?
Yeah, there's lots. I mean, one of the real low-hanging fruit ones is dishwashers. We had an investor that bought an 18 flex, and none of the units had dishwashers in them. And so we were able to look at it and say, okay, for about $550 per unit, we're able to add this dishwasher, but immediately we were able to charge $50 more in rent. We gave the tenants the option, and all of them took the option of the rental increase to do that. The nice thing about multifamily is if you can add say $600 a year to the net operating income with that dishwasher, you've actually added $12,000 to its value based on how these properties are evaluated, which is on a 5 cap. So you times the net operating income increase by 20 and you've got the new value. So each of those units had an increase basically $12,000 for a $550K or $550 investment. So yeah, that was a nice win. And obviously that added some nice cash flow. Parking is another one. Where people are willing to pay for additional parking. Another strategy I heard recently that we've used was including the cable, and then when people don't pay their rent, you can actually cut the cable off, and that usually is a pretty quick motivator to get them to want to reinstate. So that was a good one. There's lots of stuff that we've done, but a lot of it comes down to really the thoughtful renovations too. It's like, how can we go in and spend, $5,000-$6,000 per unit on the right stuff? Bathtubs, for example, are one of those things. Making a little work from home area, creating a little nook now with everybody working from home. You can charge more for rent because you're creating a space for people to be able to, like I say, operate from their house. Lots of little strategies like that.
Yeah, absolutely. And I think it's interesting too. I mean, every market is different, right? Every market has their like landlord tenant rules and regulations and what can be done or not. And you mentioned did you say you had some in Arizona as well?
Yeah.
So, I mean, the rules are probably a whole lot more, and I don't know this, so please correct me, but I'm guessing versus Ontario versus BC, is it more tenant friendly or landlord friendly over there? Like, could you increase your rents, by more than 2.2% or zero, according to what we might be able to do this year, which is nothing.
Arizona is similar to Alberta, and BC is similar to like California and Ontario. So, the very tenant friendly in BC, just like they are in Ontario. Arizona, it's the kind of place where you can ride a motorcycle without a helmet. So, it's the same thing. It's kind of all the Wild West, and it's definitely geared a little more towards the landlord.
Yeah. So it's just important to like know the differences between what can be done, what cannot be done. And, multifamily, like it's all about the NOI, right? How can you get higher rents and how can you decrease your expenses? And there's always going to be some like different strategies. And, I was even thinking like, and I was telling some of my students this, but like, if they're so below rent, here's the thing, TVs are not that expensive anymore, right? But what if you offer them a really nice big screen TV, the ones that have been there for a long time, and, get them to agree to reset the rents at a certain amount or rent that TV like to them if, or something along what you said with the dishwasher. I think that's, all the thinking outside the box thing, the standard stuff is the parking and the storage, but there's definitely more to do. And if the tenant and you agree, then, that's perfect. That's all you need is for both parties to agree.
Another one that you can do is you can set the lease at market rent, and then you can offer a discount down to what it needs to be, but it's an on-time payment discount. And the nice thing about that is, one, if they're late, obviously then the full rent would apply. But number two, it's actually not a rental increase to eliminate a discount.
Mm-hmm. That's a good point. And actually the Ontario standard lease, I'm not a paralegal, I just have to say this, but the Ontario standard lease does have a place that says rent discount. So you can jack it up a little bit more, or payment on time is the regular rent that you wanted to begin with, and just say if you're, here's your rents, but here's your actual rent that we discussed, just pay on the first.
Correct.
Yeah. So that's a great idea for sure. So what's the next thing for you guys? Like what's your next, goal or your next plan?
Yeah. So one of the things that we're really excited about right now is we're going to, as an office, build a large mixed use. We purchased a property in the city center a few years back, and we've taken it through the rezoning. So I fractionalized it and got everybody in my office involved. And so now we're going through the process together to come up with a design that we all like, and to take it through the rezoning process, as I say, and then we're going to put it out for bids under the construction contract and see how we go here for the next couple of years building this place. But that's going to be our new home, and it's a mixed use. We're going to have residential on top, some commercial strata above us, and then we're taking all the retail space. So we're going to have a nice 7,500 square foot office to move into, and we're really excited about that. And then obviously what that leads to is us scaling up the brokerage a little bit more. We're somewhat at capacity. We're at a nice comfy size of about 30, but I think when we get into the new square footage, we'd like to spread our wings a bit and scale up so we can offer our service to a larger group of people.
That is awesome. Are you building stick, or are you looking at modular? Because I started looking at modular a little bit, and I don't know what your thoughts are on it, or if you've started looking at that.
Mm-hmm. Modular is really interesting right now. This particular building, just given the height, is going to be concrete and glass, but we are looking at for a 5-story, 60 unit apartment building that we're building right now, modular, and it's very exciting. Some of the stuff that's happening there, and just the construction time is so much shorter with that.
The construction time, the not having to have to coordinate the trades and the snow. Well, I mean, you guys don't have as much snow as us, but even just the weather, right, is not even a factor. And it's so impressive. I was at the Bonneville factory, and how they go through the line and how fast they build these things is just it's amazing.
I think what that industry needs is a rebrand. I was thinking I would change the name from modular to controlled environment construction. And I think people will like it because they'll understand it. Modular, for some reason, is kind of a dirty word out here.
It's negative.
Controlled environment. Who wouldn't want your building constructed in a controlled environment?
That's a good point. Yeah. I mean, I've heard prefab as well, but you're right. You think, and it's come a long way, but you think cheap, I don't know. You know what I think of? I think of some of the Florida, places for retirement, and it's like a little trailer house. That's what I used to think back in the day, but it is not that. You couldn't even tell the difference between something that's been built stick or modular these days, right? So lots of advantages. Obviously, there's still the whole timeline, right? The timeline of having to wait for the permits for whoever else you're dealing with for that municipality, and that on its own, right? Getting the go and the green light to do it is a whole process on its own.
For sure.
So the next part of our podcast is our lightning round. I'm going to ask you a series of 5 questions, and you're going to give me the first answer that comes to mind. Are you ready?
Why am I nervous?
All right. Question number 1. What is your favorite real estate investing book ever?
The Millionaire Real Estate Investor by Gary Keller.
It's a good book. Number 2, what is your favorite podcast that you listen to most often?
I would say I listen to Patrick Francie's Everyday Millionaire, and I listen to the GED, Get Shit Done, or what is it? The Get Shit Done, GSD. That guy.
Nice. I don't know that one, but it sounds interesting.
He's a real estate guy that he interviews U.S. brokers that are doing well. It's good. He's just got a good energy. GSD.
Awesome. Number 3, what do you do for fun aside from real estate?
Boxing, snowboarding, wake surfing, just anything I can do to get outside and have some fun.
Very cool. Number 4, if you lost all of your money and your assets tomorrow, how would you start again?
Rent to own. I'd start sandwich leasing my way back to the top.
Okay. All right. Now, would you broker the rent to own, or would you be your own person that carries the mortgage with it and the down payment portion?
I would look for people who had previously been for sale, who are now suddenly for rent, and I would go and offer them the exact amount they wanted for sale on an option, and I'd pay them their half month's rent, and I'd look to sublet it and sandwich lease out of it. So I'd have no money into it and essentially be wholesaling these deals.
Awesome. All right. Very cool. Number 5, if somebody has $50,000 and they want to get started, how would you recommend they spend it?
50 grand, I would go into a single family house and use the Purchase Plus Improvements program to do your renovations and build some sweat equity that way. I'd go as high ratio as I could on a single family house.
All right. Awesome.
Using other people's money.
Good. So AJ, if somebody wanted to reach out to you, know more about you, know about, different programs that you might be offering, how can they do that? And tell us a little bit about that.
I would welcome that. And the best way to do it is just to reach out to me via email, info@ajhazzi.com.
All right. Any final last words of advice or anything else for the listeners?
I would just say that if you're at the start of this real estate journey and you're thinking this is daunting, you don't have to know everything before you do it. You just need to start, and everything will reveal itself as you go. And it's worth it. It's a pain in the butt sometimes, but it's absolutely worth the headaches to get to where this can take you.
Awesome. Thanks so much for being on the show, AJ. It was a pleasure. Thanks for your insights.
You bet. It's been my pleasure. Thanks, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?